So far, I was lucky enough and managed to do 3 investments that made 10x. The first one was Tencent, the second one was Tesla, and the third one was NIO. And I'm still holding on to those investments because I think they have more way to go. But of course, I'm always looking to where can I find the next 10x. So today I want to talk about something which I think has this potential, and this video will be a little bit more personal and more on a philosophical way even. So this video may be a little bit longer, but I'm trying to pack it full with value about investment in general, a little bit of the mindset. So if you are a new investor or if you just want to get some challenge of about how to think different in a world, then keep watching this video till the very end. And afterwards, I really want to know your personal thoughts about it as well. So let's go. And first of all, you may see that I have done a little bit of decoration over the weekends, and well, I've got some really sensible and sensitive viewers here that gave me some insight of what to improve with my videos, so thank you for that. And you may have noticed that I put this Marshall guitar amp in the background here, which I'm owning, and this tells you a little bit about how I like to treat my investments and where I put my money. So this amp that I bought years ago is a Marshall Signature model, of which only 3,000 have been produced between 1996 and 1997. Yes, I'm that old. And it's a limited edition designed by the famous guitarist Slash of Guns N' Roses. And when I bought this back years ago, this was possibly around 1,000 euros, but today you can only buy these for 3,000 US dollars plus. So how come the price of this old, outdated piece of technology has actually increased? And this comes down to what I want to talk about in this video, which is scarcity. And you guessed it, the asset and investment I'm speaking about is Bitcoin. And already 2 weeks ago, I shared this video that we're about to watch about what a CEO of a Nasdaq listed company and tech billionaire has to say about Bitcoin and scarcity. So let's watch it.
In the world of financial assets and economics, you have a $250 trillion world, and scarcity is a rare and odd and strange idea, right? Because all assets are bleeding energy. Fiat is being printed. People are issuing more bonds. Companies are issuing more equity, right? People are developing more real estate. Miners are mining more gold. All of those assets are inflating, and therefore they can't hold energy very well unless, right, unless say a company's got to grow its cash flows faster than the rate of monetary expansion. If they're not able to do that, then they bleed energy and they're not a good store of value. Bitcoin is the first software network in the history of the world that is capable of storing and channeling monetary energy without power loss. Fiat is a monetary energy system, and there are different systems. The Argentine peso is a monetary energy system that's bleeding 20% a year. The US dollar was bleeding 50 basis points a month for the past decade, but now it's bleeding 1% to 2% a month. Every system, gold is a monetary energy system. It bleeds 3% a year, and occasionally it crashes, right? And so what I think is, we created via crypto technology, via this decentralized crypto network, we created a system which will take analog energy, and people focus upon the power, but really any analog energy. I take that energy, I encrypt it, I put it into a block of encrypted energy, which we call a Bitcoin, which you generated by a combination of hash rate and then the private keys that we use to protect that block of encrypted energy. I put that onto the blockchain, and what we're doing is capturing monetary energy on a network. Then you realize, to convert analog energy or convert energy that is wasting away into an encrypted form that will last forever is an incredible achievement. It's like getting out of the gravity well. right? It's like I got into space. I'm in a vacuum. Now I can rotate at 25,000 miles an hour around the earth forever and it'll never stop, right? It's like if I put something in a vacuum, it will last forever. It's not going to decay. It's not going to be attacked by bacteria, etc. If I leave it on the ground, it's going to rot. And so what's going on here with the hodlers is, and I said this, I said, in a world where everybody, is dissipating energy, preserving your energy is the winning strategy. Everybody's dissipating it. And by the way, they might be dissipating it by holding it in dollars. They might be dissipating it by trading all the time, right? Trading is dissipating energy. All of this, buy it and sell it and move it around and convert it. All of the running around is dissipating energy. The winning strategy is stop dissipating energy because everybody else is dissipating energy so fast. If I have $100 million sitting in cash, I'm dissipating at 15% a year, doing nothing. Just flipping it to Bitcoin and doing nothing means that in 10 years, the cash goes to zero and I've still got $100 million worth of energy, right? If everybody else, if 99% of the society takes the other trade, in 10 years, you'll own everything.
Whoa, okay, this was almost philosophical, but in general, what he makes is basically 2 points. The first one is Bitcoin is an asset. He says it's a store of value. He's speaking in terms of storing energy. This is his analogy to, he's an engineer coming from that background. And the second point he makes is about inflation, that all of the other assets besides Bitcoin are actually losing value, so inflating. But who is this guy anyways? Is he one of those crazy crypto pirates and people from the darknet, talking about crypto all of the time? No, he is actually a company CEO, as mentioned before, a billionaire. And he was actually quite bearish in 2013 about Bitcoin. So it's interesting to see who is this guy and also what made him change his mind.
Look, Keith, if you roll the clock back a decade, I was always a big tech investor enthusiast. So I wrote The Mobile Wave back 2011. I published it 2012. And the theme of the mobile wave is that Apple, Facebook, Amazon, and Google are going to eat the world. And that's because all the things that we have in our life that are physical are dematerializing onto a software network. Apple ended up dematerializing all your mobile devices. Google ended up dematerializing every library and every piece of video. Facebook ended up dematerializing our social relationships. Amazon ended up dematerializing the storefront. So if you bought those, and I did, I bought a lot of Facebook and Apple and Amazon and Google 10 years ago. It's been a good run. And I think everybody today understands that. Mm-hmm. I think I would say that I did not understand Bitcoin. And Bitcoin is a thing where you don't understand it until you do. And I think everybody that encounters it, their first reaction is, well, it's kind of a tool for gamblers and hackers and cyber criminals and anarchists and the like. And that was the prevailing narrative back then. And what I thought was, yeah, eventually this will get shut down, just like online gambling. And I'd seen what happened with trade sports and the online odds makers. And by the way, I thought they're really cool, but I just noticed the regulators shut them down. So, right. So I said that when Bitcoin was $111, and then I ignored it when it went through $1,000, and we bought it at $1,111, $11,111, a lot of it. But what I'd say, Keith, is better late than never.
Yeah, big time.
A lot of people said, Warren Buffett missed Apple. Warren Buffett missed Apple for 8 of those 10 years. Yeah. And then he must have made more money on Apple stock in the last 20% of that run than he made on any investment in his entire life. And he probably made it without even noticing he made it. Because ultimately, the thing about technology is figure out the thing that's going to eat the world. If you're right, own it, hold it, and wait.
Okay, I think here he's just so spot on in what he's saying, not only about how to make investments, but also about timing. So first of all, it really reflects my personal investment strategy of buying and holding long. This is how I got into 10x investments. And really holding onto those investments, this is really what unlocks the 10x potential in the end. And usually to get into such kind of trades, it really takes a big conviction that this will take off in order to also invest a large proportion of the personal portfolio into this stock or asset. And I have to say, I'm on the same page as him. I totally missed out on Bitcoin in the beginning. I got in Bitcoin in 2018. That's pretty late actually. And also in the beginning, I had a wrong idea about Bitcoin. I thought of it more as a digital currency, and I didn't see many applications and use cases. For instance, who goes to an ATM and gets some Bitcoin in order to pay somewhere else? It's too volatile in comparison to cash. We didn't see this happening and scaling. But today, I think all this was grounded in a misconception. So what has really changed since?
People used to say to me, oh, Bitcoin is this cool thing. I'm like, well, I don't get it, but I know I've got Apple and Amazon and Facebook and Google and they're working for me. I get that. So, and I know I got other headaches and I'm not, and I got a bunch of money. So I guess that's good. So that was like noise, right? This Bitcoin thing is noise. And then people would say, well, there's the Fed is printing money. Well, that's kind of noise too, because it's not that big a deal. And then people would say, well, remote work is really the future. There's this, thing called Zoom. I use other stuff. I use WebEx or Skype, but it doesn't quite work that well for me. I've had a hard time with it. And so, no, I think you should come into the office. So when we got to February of this year, I was like kind of oblivious to the Fed. Money is good. Office is good. Don't know about these newfangled video conferencing things. And Bitcoin, I forgot I ever had an opinion on it. Honestly, that's February. March, lockdowns. Now now you can't travel. Now you can't have an event. Now you can't go give a speech. Now you can't get on an airplane, whether you wanted to or not. Once we realized that we weren't going to travel, we couldn't travel, all of our marketing events weren't going to happen. Those things we used to do, labor and capital and burning fuel, that's not the way we're going to do it. We used to spend $1 million or $2 million to do what I'm doing with you. It's going to cost me an hour and a nickel. Okay. Now, so we went to a different world. And when we realized that, our operation got jolted. All of a sudden, our P&L got jolted. Now we realize, well, we're never going to be able to throw money at something ever again. So we flipped from using people and using capital and using money to drive sales and marketing to using talent, intellect, and then YouTube and streaming video and channels and cyberspace. What happens next is the Fed all of a sudden. Wall Street doesn't Main Street doesn't recover. Main Street gets locked down. Wall Street has a V-shaped recovery. And you have a K-shaped overall recovery, right? That's the K-shaped recovery. If you're looking at the business, you could see that was going to happen by mid-April. By mid-March, it's 2 weeks to stop the spread. By mid-April, it's pretty clear it's not going to be 2 weeks to stop the spread. And it's pretty clear there's going to be a K-shaped recovery. People are not going to be back at Disneyland on airplanes by the end of April. That's very clear to everybody except for people on TV that don't want to say it, right? So once you can figure that out, you realize, oh, we have cash. We're going to have cash flow. We have all this money on our balance sheet. And by the way, it looks like assets just got 20% more expensive, but in dollar terms. But I just can't see how there's any company or the broad portfolio of companies, their cash flows didn't just accrete by 20%. The underlying fundamentals of Wall Street didn't get 20 or 30% better in the 4 weeks after March, but the stock market did. And so you saw a delamination of asset values from the underlying fundamentals. And that's the aha moment when you realize that the currency is broken. And at that point, that kicks me into a new way of thinking because I'm just living it. And I'm realizing simultaneously that money's not ever going to be useful to me. I mean, that $500 million, if I'm holding that for a rainy day, I'm not going to be able to spend $500 million to grow my revenues. If I bought 500 million worth of, by the way, one experience I've had, Dan, I've spent $25 million on Facebook advertising and Google advertising. You know what it got me? Squat, nothing. I've blown $20 million and I got zero from it. Like I'm not a big fan of it. I could, the amount of money you can spend on digital marketing is obscene. So I've spent lots of money hiring people. I've spent lots of money running events. I spent lots of money running digital campaigns. And what I realized is the money's not going to help us. And if we do generate 50 million a year in cash flow, and if the monetary supply expands by 10%, I'll lose the same 50 million in purchasing power that I'm going to get in cash flow. And I end up with the same conundrum that every wage earner has, which is just you're losing purchasing power as fast as you're making it. And so what are you going to do?
So the thoughts that Michael Saylor is expressing here are really resonating with what I'm thinking. You may have seen my videos about that I sold off some of my exposure to US listed stocks, for instance, the S&P 500, ETFs like that, and that I'm going to shift my capital to Chinese stocks as well as into Bitcoin. And the reason is that the West hasn't solved the COVID crisis yet. Although today, certainly we've got the news of a vaccine, which is great news. I hope we can go back to normal. However, all of the trillions, they have been printed and there is no underlying value to them. And even with a vaccine, which I hope gets us back to normal, we still need some time to get the economy back to normal and everything up and running again. And China in this time is leapfrogging. And also the big issue is that the money is being inflated because governments worldwide have been spending that money. And this needs to be made back by economic activity, but ultimately also in paying more taxes and by, inflating our currencies. And I'm totally not one of those crash prophets. I think the markets will keep on going up, and also say that we won't have any hyperinflation events or, those sudden events on where we see those scenarios unfold. I think it's quite in contrary. I think we will see this process slowly over time taking place. And today, as I'm recording this video, is an interesting day because with the vaccine news, we see now that some of the growth stocks are actually beaten down. Some of those stocks that are deemed to be, the COVID hedges. It will be interesting to see if investors are also pulling back money from China again. So maybe my theory here isn't working out, but I would actually doubt it. And I think that today's shift and rotation back into value stocks that have been beaten down, for instance, like travel and stuff like that, is actually a shift back into companies that have been beaten down for a reason and that are valued low for a reason. And therefore, I wouldn't touch that and instead look for buying opportunities. For instance, today, Cloudflare is trading down -5%, which is, I think, a great opportunity into the future. And believe me, the cloud services won't go away after COVID. So instead, investors should be savvy and look into opportunities that can actually beat the inflation here, either in stocks and companies to invest in, or elsewhere allocate the cash where it makes sense. And this now comes to where Bitcoin compares in this range of assets of where you can actually invest in. So if you take a look at this chart, you'll see that bonds, stocks, and real estate, all of them together make up around 250 trillion US dollars in value. And in comparison to that, the US debt is around 20 trillion. So that's getting expanded as we are having more stimulus programs and whenever the government is borrowing money in order to keep the economy afloat. So this will actually expand due to the monetary policy of the Fed. And then you also have Nasdaq, which is totally valued. So the stocks in Nasdaq trading are around 18 trillion US dollars. And then you have usually the safe side bet here of gold, which is around 9 trillion of where investors are looking to get a inflationary safe asset here. And then on the other side of the trade, Bitcoin with only 250 billion of market capitalization today. So you can see the allocation to Bitcoin is very tiny, very small still. And given all the benefits that Michael Saylor here is outlining, we should really have doubt whether or not this can be a 10x or even more investment here in Bitcoin if the market cap is catching up to its potential. Because just as here outlined, all of the other assets, they are not scarce, they can be produced, money can be printed, stocks can be issued, and so on, gold can be mined, but Bitcoin has a limited cap of the amount of Bitcoins that can be mined. And because of this scarcity, it's, in my views, also the best hedge for inflation in the end. And on top of that intrinsic scarcity element, I recently see many more catalysts that will drive Bitcoin price and adoption. So first of all, we see that companies are adding to the balance sheet. So companies are shifting to Bitcoin. For instance, Michael Saylor, who runs the company MicroStrategy, has bought more than 400 million in Bitcoin and added it to the balance sheet of this company. And the Bitcoin profits are now already outweighing the business profits, which is mind-blowing to see. Also, you may know that I'm invested in Square, and so the founder of Square, Jack Dorsey, who also runs Twitter, he is also one of the famous proponents of Bitcoin. And also just with the latest earnings call of Square, you saw that their Bitcoin segment of the revenues has increased dramatically. So just think this into 5 years' time into the future. Because in fact, what's happening here with the news of Square, what they're doing, and PayPal, they are basically building those ramps onto Bitcoin. Now it's getting more and more easy to actually access Bitcoin in order to make the purchases and buying it. And we will also see that institutions and companies will use those ramps and get onto Bitcoin and adding it to their balance sheets. And on top of that, another really big issue here is the relation between the US and China. And also you may know that China is developing their own digital currency, which is a cryptocurrency, DCAP, and they're now already starting to delivering the DCAP coins via digital wallets, for instance, in WeChat. Currently, these are just pilot projects in Shenzhen, but it is actually the aspirations of the Chinese government to actually establish the Chinese yuan, maybe as a digital currency, as kind of a national reserve currency in the world. Maybe not in the US, but maybe in the Asian states before that. But China will be moving really quickly, and this actually gets backed up by the former central banker Danielle DiMartino.
Well, clearly, there's about $7 trillion. Excuse me, I'm former central banker. I only think in trillions. There's about $7 billion right now on corporate balance sheets held as cash and cash equivalents. So you've now got a fairly new line item that says Bitcoin. And I had a lengthy interview recently with a fellow by the name of Jeff Booth. And he has looked at deflation through the prism of technology and where that's going to take the global economy in the next several generations. And it was very impactful in that we spoke about the end game, which everybody talks about. Everybody talks about what's going to happen if and when we go from, let's say, after the next 3 trillion, we tack on from $30 to $60 trillion of US debt. Where does that take us? And the standard answer is, especially inside the macroeconomic community, which I'm not trying to endorse in any way, shape, or form, but there's always some happy kumbaya debt jubilee ending to where all of the major sovereigns get together in a room, presumably including the United States and China, and they agree to expunge all sovereign debts, just wipe the decks clean. I've never really bought into the simplicity of that, given that there has been saber rattling going on in the background, and to an increasing extent, as China has become larger on the world stage and has become technologically dominant. We know that they're winning in the AI game. We know that they're winning when it comes to the number of patents that they're putting out. We know that they've already got a third of the telecommunications equipment on planet Earth. So China is definitely marching towards trying to become the economic superpower. We know, however, that the yuan is not an accepted medium of exchange as of yet, still south of 2% globally. So Jeff's main premise is that rather than segue from a currency war to a trade war, that's where we are right now in the cycle of cycles, but rather from going from currency to trade to hot war, which is how historically, since the Romans existed, how reserve currencies have exchanged hands, and that is when blood falls. Rather than doing that, Jeff suggested that Bitcoin could rise up as a peaceful alternative to there being an actual altercation between the United States and China, one group of allies versus another group of allies, China, Iran, Russia, Saudi Arabia versus the United States and the rest of the world. So it would require, I think, a lot of standing down, but I do see that as being a potential avenue going forward, because much to the dismay of gold bugs, I've never seen the practicality of switching back to the gold standard.
So the investments that I usually make are really not only purely on some financial analysis or also some technical efficiencies and stuff like that, but I really also want to see those bigger picture and the macro trends, but also understand it from a consumer perspective. And after hearing all of this, I'm being left with this strong need or wish and desire to own Bitcoin, because I think it just makes so much sense. And then on the other hand, thinking about it, that if each of the millionaires on the world today want to own just one Bitcoin, they couldn't do it because there's not enough supply for it. So this is mind-boggling to think about. So I'm starting to sensing here that there is something, I think, bigger going on here. And I had such kind of feelings with the iPhone, with people want to drive EVs in comparison to ICE cars. But of course, the really big problem here that we are seemingly already trading at all-time highs. So we are not in the early phases of the adoption curves here, it seems. And now, with this desire, it feels a lot like fear of missing out and buying into something that is already valued very high. So that brings me to the topic of timing the purchase.
And in this particular case, I say it's reasonable. 99.9% of all the assets in the world are in alt assets. $250 trillion in bonds, stock, real estate, precious metals, derivatives, $250 billion in Bitcoin, 0.1%, 10 basis points. I don't think that means that 99.9% of the people don't know, but maybe 99% don't really understand it. So on one hand, we know we're early because it's the solution to $250 trillion worth of a problem. Right? The problem is in an aggressively expanding monetary environment where fiat currency is not going to hold its value, i.e. if I'm sucking 10 or 15% of the energy out of a unit of currency every year, and it depends upon which unit of currency, right? In Argentina or Turkey, we're losing more than 10% energy a year. In the US, we could debate whether it's 10 or whether it's 15. If you looked at the M2 monetary supply, right, maybe it was 5% expansion for 10 years, and now it looks like it's 20% this year. And what's your forecast for next year, right? In an environment where you're expanding the monetary supply, you're sucking the energy out of the unit of currency, all the equities, all the bonds have to be valued as the discounted value of the cash flows. And so the discount rate is equal to the risk-free discount rate. Seems like it's the monetary expansion rate. And so if the money supply is expanding by 10%, the discount rate's got to be 10%, which means that the fundamental underpinnings of a bond based on its cash flows have to be discounted by 10% a year. And an equity has to be the same way. So everybody in the world is, if you've got real estate, you're valuing the real estate based upon the discounted cash flows of the rents. And if you got a bond, you're valuing the bond based upon the sum of the discounted cash flows of the bond. And if you got a stock, you're valuing it based on the sum of the discounted values of the stock and the fiat currency in the system where the entity is doing business, whatever that might be. So everybody's holding those assets. And in a world where the fiat currencies are expanding at 0% a year, there's no problem, right? The underpinning, if the US dollar was expanding at 0% a year, the underpinning of the currency, the base currency layer is stable. You have hard money. No one's got a problem. And as we expand it, everybody's got a problem. And now you've got a solution. And 99% of the people don't understand the solution. Ergo, we're very early in the S curve, but we're 250 billion into it, which means that when the fire was, when we were at $1 billion, it could have been snuffed out. I mean, you could figure out what could have happened. The IRS could have given you a hostile tax treatment. The government could have made it illegal to own it. You could go through a parade of things. The forks could have forked again. Hackers could have found a way to hack the blockchain and drain off the value. Each of those things could have been debilitating to its growth. It's just like starting a fire. It's like you can snuff out the flame, but once it's a forest fire, not so easy to snuff it out, right? So I think that we've got a forest fire. We have a fire in cyberspace. It is, and the like. Then you're going to get the adoption benefit as people like me stampede in. It's like, I paid whatever, $9,800 a Bitcoin, a lot more than most hodlers paid. I wasn't thinking if I sit around, maybe it'll go back to 4,000. I was thinking, I'm a rational person reacting to rational circumstances. What if other rational people with more money than me have the same idea I have? In which case, I'm gonna have to chase this thing to 20, 30, 40, 50,000. And hence the phrase, once you understand it, you go to bed at night with chronic anxiety, feeling chronically short. You're like, I was worried the rest of the world would start acting rational. Right. And so in that, I was happy to be able to buy it below 10,000. I was like, this is a gift. Thank you. I'm not anybody that all the people that think they know Bitcoin, that sit around and they whine that they're, or they lament, I got to wait till it goes back again. I'm going to wait for it to crash. I think they don't really understand Bitcoin, because if they understood Bitcoin, then they would be thinking, the only thing I worry about is how do I figure out how to buy more?
So once again, this comes also back to investment philosophy, where, with those companies like, for instance, NEO or Tesla or Tencent, you got a feeling that they're already quite valued and, there is no upside anymore. But in the end, in the really long term, this could actually be wrong. And of course, now this feels a lot, once again, like FOMO, fear of missing out. And also there's lots of risk aligned to that I'm not speaking in this video about. So take a look, for instance, at the video with Dave on investment, a YouTuber that I really admire, and he's having the Pomp as a really Bitcoin bull in the studio, and talking about the downsides of Bitcoin and what could actually go wrong in terms of that Bitcoin could get forbidden by states and so on. And I listened to all of those arguments in doing my due diligence, and ultimately I came personally to the conclusion that I want to own this asset and I want to expand on that, and that I'm actually too short invested in Bitcoin currently. So today my portfolio only has around 1% of Bitcoin, which is actually usually fine for most of the portfolios out there. That's at least what other people are saying. But personally, I have to decide to dedicate more to that. But as you can see in this chart, my portfolio got really heavy on stocks, of course, because the stocks I invested in went up a lot. So I am averaging my portfolio on more than 800% this year in gains. And but on the other hand, I also told you how I sold off my ETFs, how I sold off more of the index funds, because I think, once again, like today, we see that most of this money is aligned to companies, value companies that are having a problem even after COVID. And so I think, although I am almost not invested in cash anymore, I will still want to use the last pieces of cash that I have to put it into Bitcoin, even at those prices right now. That doesn't mean that this would also be good for you personally, but I'm just telling you transparently, always on this channel, like what I'm personally doing, what I'm seeing there out there, how I'm treating it. So I could be wrong on that in the long run. This is not investment advice. Make up your own minds. Also here the bear case on Bitcoin and so on. But I have decided that I will be doing that. And interestingly, even today, Bitcoin is down 1%. which is interesting to see because this is the reaction to the COVID news as well. But I don't think that this will be able to fight those overall trends of scarcity, of the development in China, and of companies and consumers buying into Bitcoin and wanting to own a piece of this asset. So now you ask how I buy Bitcoin, and the cool thing about Bitcoin is you can actually buy, little pieces of it. You don't have to buy an entire Bitcoin with the purchase you make. And I'm personally using Coinbase Pro, which I don't like as an interface, but it's convenient. They have small fees, so that's the way I'm buying it. And then I actually personally used to open more Bitcoin wallets. So I also have a German company called Bitwala, which I'm using because there you can even earn an interest on the Bitcoin that you're holding. And they're even giving you this kind of a credit card, which you can load with Bitcoin and paying with that. I'm skeptical on that, to be honest, because as I mentioned, I see it as an asset, not as a way of transactions and making payments here. But in the end, there is the security issue around that your wallet can be hacked. If you lose the keys to your wallet or the passwords, you will lose access to your Bitcoin. So you can lose money on many ways here with Bitcoin. Bitcoin could also crash. It's not a hedge against a falling market. We've seen that also during the Corona crisis when the markets crashed. Also people went out of Bitcoin because they wanted to have the cash. But as always, I'm thinking 5 to 10 years out, maybe even more when I talk about Bitcoin here. And now you may call me paranoid or even too much of a nerd here, but I just do think that this will be lifting off and that we are still in the early stages of Bitcoin here. And I'm really happy to hear your personal views about it. Please let me know in the comments what you personally think about it. Do you own crypto already? And also, do you think that those arguments are reasonable and valid? I really want to hear more about that. So once again, closing this with the fact that this is not investment advice. This is just my world through the lens of a retail investor. I'm happy to hear any feedback of what you think is wrong with those arguments. And then see you in the next videos. And thank you guys for the feedback and also for the new patrons. And it looks like we're breaking the 30K subscribers this week. So that's awesome. Awesome journey with you guys. Thank you guys for watching and see you in the next one.